Hello everyone, welcome back to my YouTube channel. In this class, we are going to learn about methods of valuation of material issues. See, when materials are issued from the stores to the production department, we need to assign a value to them, right? We will not give the materials freely to the production department. But the same material that might be purchased at different prices over time. So here the question arises, which price do we choose? That's where valuation methods comes in. Okay, so these methods helps to determine the cost of materials issued, and they can also affect both cost of production and closing stock value. Clear? See here, to find out the cost of materials issued from store, several methods are used. But the choice of method should be based on the nature of material and the type of business. So on the basis of nature of material and the type of business, we have to choose the correct method. Clear? So next see the different methods of preparation of stores ledger account. See, in the last class we discussed about store ledger account. Clear? Here stores ledger account, that is maintained by whom? That is maintained by the accounts department. Here they will maintain the quantity as well as the value of materials issued. Clear? So these are the methods. Here they are useful to determine the value of material issues. Let's see one by one. See, on the basis of actual cost, there are 5 methods. That they are specific price method, first in first out, last in first out, highest in first out, and base stock method. And on the basis of average cost, simple average price method and weighted average price method. And on the basis of current price method, replacement price method, next in first out method. Next, on the basis of notional price method. On the basis of notional price method, it includes 3 methods. They are standard price method, inflated price method, and reuse price method. So, out of these methods, most common methods they are used by the businesses, they are first in first out method, that is FIFO, last in first out method, that is LIFO, and weighted average cost method, simple average cost method, and specific identification method. Clear? So most common methods they are used by the businesses, first in first out, last in first out, weighted average cost, simple average cost, and specific identification method. Clear? Now let's discuss one by one. In today's class we are going to discuss about first in first out method. What is the meaning of first in first out method? It means, see here, this method assumes that the materials purchased first are issued first. Clear? So the cost of older stock is charged to the production first. It's logical and often matches actual physical flow. What does it mean? It means the materials purchased first, that one we need to issue first. And after that we need to utilize the newer one. Clear? So the older stock is used before the newer one. For example, if you bought or purchased or received 100 units at rupees 10, and again you will purchase 100 units at rupees 12, means here the oldest stock is which one? 100 units at rupees 10, and the newest one, that is 100 units at rupees 12. Means here first we need to issue 100 units at rupees 10 because we are following the first in first out, means the materials purchased first are issued first, and we have to apply the same rate. Clear? And next we need to issue 100 units at rupees 12. Now you issue 150 units under FIFO. Now what we have to do under FIFO method? We have to issue the oldest one, but we have only 100 units. Okay, then issue full 100 units at rupees 10. Same rate we need to take into account, and remaining 50 units we have to taken from the newest one. Out of 100 units, take 50 units at rupees 12. At rupees 12, not 10 here. Clear? At rupees 12. So balance of stock with us, that is rupees, out of 100 we issued 50, means remaining balance with us, that is rupees 50. See here, that is rupees 50. Issued 150 units under FIFO, And FIFO says that the materials purchased first, they are issued first. Means here first we purchased 100 units at rupees 10. So issue 100 units at rupees 10. But still we need to issue 50 units. So go to the newer one and out of 100 units take 50 units and issue at the rate of not 10 but at the rate of rupees 12. If you are issuing from the oldest stock, use the same rate. And if you are using the newest one, take the same rate of newest one only. If you are issuing from the oldest stock, then use the oldest stock's rate. Clear? So balance of stock is with us. In the first oldest one, we have utilized full units. But from the newest one, we have utilized only 50 units. We issued only 50 units. Means balance of materials with us, that is 50 units. Clear? Now I will explain this FIFO method through one example. See here. Prepare the stores ledger under FIFO method. 1st Jan 25 opening balance 200 units. See, these are the receipts, these are the issues. Here we have to enter the transaction date wise. Clear? According to the date we have to prepare the stores ledger account. Clear? So this is the format of stores ledger account under FIFO. Are you able to see, right? So date, receipts. Here we have to add the particular column only if they have given the information about receipt number and issue number. But here they have not given anything. So skip particulars column. Clear? Receipts, under receipts quantity rate amount, issue quantity rate amount, balance quantity rate amount. This is the format of stores ledger account under FIFO method. Now one minute. Yes. See here. 1st Jan 25 opening balance 200 units at rupees 25 units. Means they have the balance of 200 units at rupees 25 units. Means this is to balance brought down. Clear? So write down the date 1st Jan 25. So balance, we have the balance of how many? 200 units. So go to the balance column and write down 200, right? 200 units at rupees 25 means how much? That's 5,000. 200 into 25 equals to 5,000. So write down in the amount column, that is rupees 5,000. Clear? On the 1st January the transaction is over. Next 2nd Jan there is no any transaction. 3rd also and 4th we have received 200 units at rupees 24 per unit. Clear? So write down 4th Jan received. Go to the receipt column and write down 200 units at rupees 24 per unit. That is 200 into 24 equals to how much? 4,800. Write down 4,800. Clear? And 4th, you have issued any materials? See, issues. No. On 4th Jan, you have not issued any materials. Now, balance of stock with us. First, we have this one. That is on 1st January. 200, 25, 5,000. And next 4th Jan. 200 at the rate of 24, that is equals to 4,800. Means this is our oldest one and this is our newest one. If any issue happens in the coming dates, what we have to do? First we have to issue from the oldest one. As per FIFO method, the materials issued, which materials we need to issue? We need to issue the oldest stock as per the FIFO method. Right. So 4th transaction is also over. On 5th, if there is any transaction is there. See, yeah. On 5th, there is an issue. So 5th Jan, 250 units. They issued 250 units. So write down 5th Jan 250 units. Go to the issue column. Okay, you should be very careful in issue and balance column. Okay, go to the issue column and issue 250 units. So here the oldest stock is 200 quantity of materials. First you issue this one, oldest one, as per the FIFO method. Write down 200 at the rate of 5,000. Clear? And after that you issue 250, but here only we issue 200 units, right? So go to the newer one and out of 200 units take or issue 50 units. 200 plus 50, 250 at the rate of 24, not 25. Okay, if you are issuing from the oldest stock, take the same rate of oldest one. Clear? And if you are issuing from the newest stock or newest quantity of materials, use newest one's rate. Clear? So 50 into 24, 50 into 24 equals to 1200. Now we issued 250 units on 5th January 25. Now we have to calculate the balance of units. Here from the oldest one we issued full units 200, but from the newest one we issued only 50 units. So remaining or balance of units with us 150 at the rate of 24. So 150 into 24 equals to 3600. Clear? I hope this is clear to you all. Now next one, 5th, 6th, there is no any transaction. 7th also, 8th also, 9th also, 10. On 10th we received 150 units at the rate of 23 per unit. So write down the date first. On 10th Jan 25 we received 150 units at the rate of 23. Clear? 150 into 23, how much? That is equals to 3450. 3450. And is there any issue on 10 Jan? No, right? So go to the balance column and write down the balance of units of stock with us. First 150. Clear? This is the oldest one. And newest one is on 10th Jan. That is 150 at the rate of 23. 3450. So here this transaction is over. Next 11, there is no any transaction. Next 12, there is an issue. 12th Jan issue 200 units. So write down 12th Jan 25 issued 200 units. Okay, first go to the issue column and write down 200 units. But here in the oldest one we have only 150, right? So write down first issue 150 units. Use same rate of oldest ones. Now go to the newest one and 150 we already issued, but we issued 200 units. Means out of 150 we have to issue 50 units at the rate of 23. 50 into 23 equals to 1150. 1150. Clear? Now balance of stock, out of 150 we issued only 50. Means here 100 units of materials are balance of stock with us, that is 100 units. 2300. Clear? Now next one, 12th over, right? 13, there is no any transaction. 14 also, 15 also, 16, 17, 18. Yes, 18 there is one receipt is there. That is 100 units at rupees 23 per unit. Clear? So write down 18 Jan 25 100 units at the rate of 23, that is equals to 2300. Now there is no any issues on 18. Go to the balance, write down 12th balance, 12th Jan balance and 18th one 2300. Clear? 1 minute. Next, 19, there is no any transaction. 20, 21 also. 22nd. On 22nd, we have receipt, right? 100 units at rupees 23.50 per unit. Write down on the receipt side, 22nd, 100 units at the rate of 23.50. 100 into 23.50 equals to 2350. 2350, and there is no issue on 22nd. So go to the balance column. Write down these balance of units first. 100, because out of this we are not issued any units. Clear? They are still with us. This is the 22nd transaction. 2350. Clear? Now, next on 23rd, there is no any transaction. 24th also, next 25th, that is 250 units issued. On 25th Jan, 250 units issued. So, write down first date 25th Jan 25. How many units? 250 units. So, first here we need to utilize the oldest one, that is 100 units. 100 units at the rate of 23. Go to the issue column and write down in the quantity column 100 units. In the rate column 23 and the amount column 2300. We issued 250 units. Remember this. Out of 250 we issued 100. Clear? Means still we have to issue 150 units. Now go to the next one. 100. Again issue 100 units. So now we issued 200 units. But on 25th Jan, we issued 250 units. Means still we need to issue 50 units. So go to the third one and out of 100 units, issue 50 units and use the rate 23.50. 50 into 23.50 equals to 1175. 1175. Clear? Here. Now go to the balance. 100 we utilized. 100 we issued, but out of 100 we issued only 50. So balance of stock with us 50 units. Clear? So this is the way we need to solve the problems under FIFO method. After 25th there is no any transaction. So clear? So here we need not to total. So write down, therefore the value of closing stock equals to this balance. We need to write down 50 units at rupees 23.50. See here. Value of closing stock, the balance one. Okay. Balance of units with us, that is the value of closing stock. Clear? Equals to 1175. Okay. In this way we need to solve the problem under FIFO method. This is very simple. Clear? We need to issue the materials that we purchased first. Clear? Okay. So I hope this problem is clear to you all. If not, please leave a comment. And if anyone wants notes or this problem solution, please comment. I will upload in my Telegram channel and I will provide the link in the description box. Thank you.